The year 2025 has begun with Bitcoin making headlines once again. This time, the buzz is louder and the stakes are higher. Bitcoin, the pioneering cryptocurrency, is not just a topic of discussion among tech enthusiasts and financial experts. It has captured the attention of the global media and the general public alike. Its price has soared, reaching unprecedented heights. The numbers are staggering, with Bitcoin breaking all previous records and setting new benchmarks in the financial world. Investors who had the foresight to invest early are seeing unprecedented returns, and new investors are flocking to get a piece of the action. This surge is not just another speculative bubble. Unlike previous spikes, this growth is underpinned by solid fundamentals and widespread adoption. Financial analysts are delving deep into the data, trying to understand the forces driving this meteoric rise. The consensus is clear: Bitcoin is here to stay. It signals a fundamental shift in the way investors view Bitcoin. No longer seen as a fringe asset, Bitcoin is now being recognized as a legitimate and valuable part of a diversified investment portfolio. Financial advisors are increasingly recommending Bitcoin to their clients, and investment meetings are abuzz with discussions about its potential. The cryptocurrency is rapidly gaining recognition as a mature asset class. Major financial institutions are now including Bitcoin in their asset management strategies, and it is being discussed alongside traditional assets like stocks, bonds, and real estate. This acceptance is a significant milestone in Bitcoin's journey. This newfound momentum is driven by several factors. Increased institutional investment, technological advancements, and regulatory clarity are all playing a role. The market trends indicate a growing confidence in Bitcoin's long-term viability and success. However, one stands out as a primary catalyst: the approval and increasing popularity of spot Bitcoin exchange-traded funds, or ETFs, in the United States. This development has made it easier for a broader range of investors to gain exposure to Bitcoin without having to directly purchase and store the cryptocurrency. These investment vehicles have opened the floodgates for wider participation in the Bitcoin market. The impact of Bitcoin ETFs cannot be overstated. They have democratized access to Bitcoin, allowing both retail and institutional investors to participate in its growth. As a result, the market is seeing an influx of new capital, further driving up the price and solidifying Bitcoin's position as a key player in the financial world. ETFs have revolutionized the way people invest. They have opened up new avenues for both seasoned investors and beginners alike. They offer a simple and regulated way to gain exposure to a particular asset class. This simplicity is particularly appealing in the fast-paced world of finance. In the case of Bitcoin ETFs, investors can buy shares that track the cryptocurrency's price. This means they can benefit from Bitcoin's price movements without directly owning the digital currency. They don't need to grapple with the complexities of setting up a digital wallet or navigating cryptocurrency exchanges. This removes a significant barrier to entry for many potential investors. This ease of access has been a game changer for Bitcoin. It has made the cryptocurrency more accessible to a broader audience, including those who may have been intimidated by the technical aspects of direct Bitcoin investment. It has attracted a wave of new investors, particularly institutional investors who were previously hesitant to enter the market. These large-scale investors bring significant capital and credibility to the Bitcoin ecosystem. With ETFs, they can now add Bitcoin to their portfolios through familiar and trusted channels. This integration into traditional investment portfolios has further legitimized Bitcoin as a viable asset class. Educational initiatives and financial seminars have also played a crucial role in democratizing Bitcoin investment. By providing clear and accessible information, these programs help demystify Bitcoin ETFs for the average investor. Media coverage has amplified the reach and understanding of Bitcoin ETFs, making them a topic of everyday financial discussions. This widespread awareness has contributed to their growing popularity. From young tech-savvy individuals to older, more traditional investors, Bitcoin ETFs have bridged the gap, making cryptocurrency investment accessible to all. This inclusivity is a testament to the transformative power of ETFs in the financial world. The entry of BlackRock, the world's largest asset manager, into the Bitcoin ETF space has been particularly significant. BlackRock's reputation and influence gave the entire cryptocurrency market a major credibility boost. When BlackRock filed for a Bitcoin ETF, it signaled to the world that Bitcoin was here to stay. The asset manager's rigorous due diligence and commitment to regulatory compliance gave investors greater confidence. This move further fueled the demand for Bitcoin ETFs, pushing the cryptocurrency's price higher. Beyond the ETF effect, Bitcoin's inherent characteristics continue to attract investors. Its limited supply, capped at 21 million coins, creates a sense of scarcity. This digital scarcity resonates with investors seeking a hedge against inflation and the debasement of fiat currencies. Moreover, Bitcoin's decentralized nature makes it globally accessible. It transcends geographical boundaries and empowers individuals and countries with limited access to traditional financial systems. This borderless nature adds to its appeal as a store of value and a potential medium of exchange. Section 5. Predicting Bitcoin's future, a range of perspectives. Predicting the future price of Bitcoin is notoriously difficult. Its volatile nature makes it susceptible to sudden swings. However, the current market sentiment is overwhelmingly bullish. Some analysts predict Bitcoin will reach $75,000 by the end of 2025. Others, more optimistic, foresee a price of $100,000 or even higher. These predictions are based on the expectation of continued institutional adoption, favorable regulatory developments, and growing global awareness of Bitcoin's potential. Section 6. Institutional adoption, from hesitancy to embrace. Institutional investors are increasingly recognizing Bitcoin's potential as a strategic asset. They are drawn to its potential for high returns and its role as a hedge against inflation. Major corporations are adding Bitcoin to their balance sheets. This trend is expected to continue, further driving up demand and price. As more institutions allocate a portion of their portfolios to Bitcoin, it will become increasingly integrated into the mainstream financial system. Section 7. Regulatory landscape, navigating the path forward. Regulation remains a key factor influencing Bitcoin's future. While the regulatory landscape is evolving, clarity and certainty are crucial for sustained growth. The approval of Bitcoin ETFs in the United States was a significant step towards regulatory clarity. However, governments worldwide are still grappling with how to regulate cryptocurrencies. Striking a balance between fostering innovation and protecting investors will be paramount. A supportive regulatory environment will encourage further adoption and investment in Bitcoin. Section 8. Macroeconomic factors. Bitcoin as a safe haven. Global macroeconomic trends are also playing a role in Bitcoin's rise. Growing concerns about inflation, geopolitical instability, and the stability of traditional financial systems have led some investors to view Bitcoin as a safe haven asset. In times of economic turmoil, Bitcoin's decentralized nature and limited supply make it an attractive alternative to traditional assets. This perception as a hedge against economic uncertainty could further fuel demand for Bitcoin in the coming years. Section 9. Conclusion, a transformative journey. Bitcoin's journey has been nothing short of remarkable. From its inception in 2009 by the mysterious Satoshi Nakamoto, Bitcoin has defied expectations and skeptics alike. From its humble beginnings as a niche digital currency, primarily used by tech enthusiasts and early adopters, Bitcoin has grown exponentially. It has evolved into a globally recognized asset class, attracting attention from major financial institutions and individual investors worldwide. The approval and growth of Bitcoin ETFs have marked a significant milestone in its journey. These financial instruments have made it easier for traditional investors to gain exposure to Bitcoin without directly holding the asset. Particularly noteworthy is BlackRock's entry into the market. As one of the world's largest asset managers, BlackRock's involvement has lent a new level of credibility and legitimacy to Bitcoin. These developments have been pivotal in driving this transformation, opening the doors for more widespread adoption and acceptance. While predicting the exact future price of Bitcoin remains a challenge due to its inherent volatility, the overall trend has been one of growth and increasing value. The confluence of factors driving its current surge suggests a bright future. Institutional adoption, increasing regulatory clarity, and macroeconomic uncertainties are all playing crucial roles. These elements are contributing to Bitcoin's growing appeal, making it an attractive option for a diverse range of investors. As we move further into the digital age, the role of Bitcoin and other cryptocurrencies is likely to become even more significant. Bitcoin's journey is far from over. It continues to evolve, adapt, and challenge the status quo, pushing the boundaries of what is possible in the financial world. It continues to challenge conventional financial norms, offering an alternative to traditional banking and financial systems. As Bitcoin integrates further into global finance, it is poised to reshape the global monetary landscape, influencing how we think about money, value, and financial transactions.